What's up, guys? This is a market update for August 21st. So we're going to start off talking a little bit about the markets in general. We'll touch on real estate and then a couple of stocks, and then we'll wrap it up. It should be not too long. So to start off with, the Fed came out and they issued a statement saying they were alarmed with the condition of the economy, mostly like the Treasury spending that they're continuing to print the way they are. But I think the market took that as good news, as they're vigilant in a sense, and obviously they're always going to be ready to print. So we saw a little bit of dip, but in the S&P 500, but it went right back up, right? The next thing was for housing. So I'm getting a lot of messages regarding, this is the right time to buy real estate? Is it not? And guys, it all comes down to the deal, and we'll talk about that towards the end of the video on my thoughts. And if you've been watching my videos, then you already know what I'm going to say. But if you're new, then hopefully you'll get my point of view on how I see it. And news today, I just posted I don't know when I'm going to post this, but in my story that UK retail sales were up. So I guess it really isn't all gloom and doom or gloom and gloom, however you want to say it. So it shows positive signs of recovery looking past COVID, right? So let's look at some stuff that's under the radar. So I got Walmart here, and some people have already counted this out as like just an old traditional company. And one of the key things in business is you always gotta stay innovative. If you're not growing, if you're not trying new things, you're already getting old, right? So we all know Amazon leading in e-commerce right now and starting to get a foothold in the retail, especially with their acquisition of like Whole Foods. And Walmart was falling behind, but not just Walmart, Target blew it out of the water for their earnings this quarter. So it shows that not all brick and mortar obviously is dead. It's just you got to pick the right winners. And the reason why I'm interested in Walmart is I saw an ad where they're also starting to do drop shipping, their own brand of FBA, which is like FBA is fulfilled by Amazon. So essentially, if you wanted to sell something on Amazon, you could open up an Amazon store. You could sell a product that you don't really own, that's in a warehouse centrally located for Amazon, and they would ship it for you. Walmart's also, jumping on that bandwagon. I see a robust deployment of capital investment, however you want to phrase it, in their actual e-commerce business across the states, I should say. So in every single state, they're starting to do curbside pickup. They're starting to do, online deliveries, and, you'll have it ready there. And, the biggest news that makes me very bullish on Walmart going forward is the fact that they're going to be adding a subscription. And in a sense, it's going to work similar to Amazon. It could even end up working better, because what Walmart's trying to do is same thing, 2-day subscription. And the rumors are that it's going to be priced at around $99. So you sign up and you're going to get, free shipping, just kind of like Prime is. But if you think about it, it works more for Walmart because it'll be centralized, right? And if you think about the data that they're collecting and the data that they already have, much like Amazon, if you live in a town, let's say you live in town XYZ, and you open up the Walmart account, or you constantly have been using like a number or whatever it is for them to collect that data, they kind of know what's being sold in that town, and they kind of know what they need to have on hand, right? So this is where data comes into play, and they're huge in it. Amazon has a way bigger advantage because of their Amazon Web Services and the data that they can mine from that, but I think Walmart's not far off. And if you look at how Amazon kind of operates, right, they have a distribution center that's centered around like a bunch of little towns. And as you order things, they start collecting that data. They know what's selling. Well, the infrastructure is already in place for Walmart. They already have huge, 10,000, 15,000, 20,000 square foot Walmarts, and they could effectively expand a lot quicker, and I've seen it, and you guys have probably seen it too, when you go to a Walmart and you see like a section of the parking lot, blocked off, and they have like the seat trains with product full of them. Usually around Christmas time, they do Christmas trees, or like when they'll do like pumpkin sales and stuff like that. But as they collect this data, I think Walmart is in a better position to be able to handle the demand for local consumers to have, like, not even same day. I'm talking about within a few hour delivery to your home or business. So with these moves in place, I would probably put a price tag at, on Walmart above $200, anywhere between, I would say, a year to 18 months. And for me, the one thing that I'm looking for before I, decide to open up like a nice premium position on them, like sell the premium on this stock, is I need to see in the next 3 months how Walmart plans on rolling this subscription model out, and what their plan of execution is going to be, towards the long term. Like, are they going to stick with it? Are they not going to stick with it? Whatever. And you've noticed over the last 4 years, they've made a huge investment into online businesses. They've pretty much bought out other e-commerce businesses and kind of jumbled them together, with Walmart.com. And not to mention, guys, I don't know if a lot of people know this, but it's pretty common knowledge. They also do own Sam's Clubs. And that's also important because, like I said, I think their distribution channel is already extremely strong. And if they start capitalizing on this, it's to the moon, baby, and you can take that to the bank. So if you don't have Walmart on your watch list or whatever, definitely put it on your watch list. So, and the next stock that no one can stop talking about, especially this year and especially in the last week, is Tesla, right? It's literally through the moon, literally up over like 150% depending on where you evaluate it, from January 1 or when the the huge market correction happened because of COVID. But guys, it still does have room to run. Now, I only played this stock one time. I told myself I never would, but I sold the 1500, made some good money off of it, and I'm just staying away from it now. But I could see it going down. I could see it going up. I see it's more likely it's going to go up, and there's a lot of catalysts in place. I've posted that on my story. A catalyst is something that's going to cause the stock to go up, right? One is definitely the stock split. In my opinion, that's one of the reasons why it skyrocketed up. The second bit of news is going to be that once that stock split takes place, it's most likely going to be invited by the S&P 500 to join the S&P 500. Therefore, one company will leave, it's only 500 companies, but Tesla will join that, and that's also going to give the stock a bump. Then right around the corner towards mid-September, we're going to have Tesla's Battery Day. And hopefully if they come up with more innovative or better strategies or whatever it is, which I'm sure they'll unveil something, that's also going to be a cause for a catalyst, because potentially future earnings are going to be more than what's priced in now. All things being equal, that we all kind of realize the market's high. So if you're investing right now, hedge. And what that means is if you have a long-term position, it's a sizable position, and you're scared of the long-term downward trend of when the market might go down, you definitely need to be buying some puts. You don't have to hedge the whole thing. It just depends on how big it is. So this is where options are actually supposed to be traded, not like degenerates like us that just want to make a quick buck. It's supposed to be when you have a decent position, $20,000, $30,000 in the market, and you kind of chart out when earnings are going to be, and you're long-term in the stock. You want the upside. So the upside is you actually holding the stock, and the downside to protect yourself is you want to buy some puts just in case things go sideways. So if you are long-term into something and you're a little bit nervous, definitely start looking into some puts, open up those charts and see what's feasible for you, especially around earnings, and especially with the political election coming on. Highly recommending, it would be a good idea. And then we got, that basically if you're just day trading, same thing with if you're long-term investing, is you want to just mitigate risk. That's the number one thing here, right? You want to look at, okay, well, how much am I risking versus how much am I making? And that's, every single person watching this, you all have different positions on. So it's up to you to determine that. I'm more than happy if you want to DM me the position you have, and I can take a look at it. If it's a company I'm familiar with, if I'm not, I'll tell you straight up, hey, I'm not sure about it. I can try to look into it if I got time. And then lastly, for real estate, you got to remember what I mean by it's all about the deal. For me personally, I don't want to do a deal if I can't lock in a 10% return. So if I'm putting $100,000 of my money to work in a deal, or 200,000, whatever the number is, it could be a dollar. I'm looking to retain or earn 10%. So if I deploy 100,000, I have to look at the math and look at the deal up and down and say, okay, I know I can make $10,000 from this deal a year. And the reason why is because, stocks, if we see something bad happen in the market, it's very easy to get out of a stock. There's always going to be buyers and seller, and the market is liquid. So someone's always buying and selling, and you could get in and out quickly. But when you purchase real estate, it ain't that easy to get out. You got to first list the property, get the agent, open up escrow, do this, do that, do the inspections. It takes a lot of time to get out of a real estate deal. So when there are downturns in the economy, or you might have to, historically rents have not been, plummeted, but God forbid that happens, if you have a 10% return, and let's say your business falls and you lose all of it, you're giving yourself that safety net of 10%. You know what I mean? So in real estate, you're playing very long, at least 5 to 10 years, before you either refi or you sell. So, let's say you did a deal and the worst thing happened. More people lose their jobs, or COVID comes back stronger, whatever it is, or you can't evict anybody, and you got to bear that risk. So if you bought a real estate deal, or a property or rental, whatever, commercial lot, and you bought it with 10%, yield in a sense, that's your hedge. That's how much you got of protection. Now, if you're doing a deal and you only got 5%, to me, that's a lot riskier. Just because if things do turn south or something bad happens in the property, what are you going to do? And that's a lot of the times when you see people, go under, or they just get out of the deal and they short sell, which means they just, take a 20-30% haircut. They say, okay, well, I'll sell this property for 70,000. I bought it for 100 because I don't know what the next 2 years are going to be like, and I was in over my head. So, guys, it's always about the deal, and it's always about the yield. If the yield is there, that means the investment was good. You could purchase with no fear. So these are the things that I'm looking at, going forward, is just to kind of see how this more political landscape obviously develops. And I'm just keeping a closer eye on which way the market's going to be moving. And with real estate, like I said, if you got a great deal, buy it. There's never going to be a perfect time for you to buy. The perfect time for you to buy is when you're ready and what you're willing to lose. So, hey, I hope watching this video you learned at least one thing or something new to look out for. If you did, I appreciate you following me, appreciate you watching. If you could share this with at least one friend, or share it on your story to make me or help me grow the account, I really appreciate it. Other than that, have a great weekend.